Yo, what's up guys? It's your boy Looney, and today the market got crushed. And it sort of seemed like a fake pump from yesterday or earlier in the week, and now we're seeing a bloodbath across tech, across crypto. Pretty much every sector has been hit hard, including growth names and stocks that even reported good earnings. So in this video, I'm going to break down what actually happened today and what I'm doing in my portfolio and how I'm adjusting moving forward. But before we get into this video, quick shout out to the Discord. It is free to join. And I also offer a premium membership for $8 a month, and you get access to one-on-one coaching, trade callouts. I have an option selling course. I do giveaways and more. You can check it out. All the links are in the description. So let's actually start with the numbers, and my portfolio was hit significant, down 5% or 5.3%, and the SPY and just pretty much everywhere was down significant. So let's actually pull up SPY, down 1%. VEO is another ETF, down 1%. NASDAQ also dropping as well. Crypto, absolute tear, down 3%. So yeah, pretty much everywhere you look, my portfolio is a mix of hype names, crypto, and some safer plays in Big Mac 7. And you can see pretty much everything was red on my portfolio. The only thing that was considered green is Google. I wouldn't even consider that one green. I think it had some news today. I'm not entirely sure. It seems like all these different companies are coming out with big news every day with different partnerships. So who knows what actually is going on under the hood. And we had a lot of earnings today, or we had a lot of earnings this week. Oscar beat earnings, and it actually jumped up pretty significant prior to earnings. I don't know exactly when the earnings were, what time, but it did beat earnings, and it actually did provide pretty good earnings. I think it missed on revenue. I'm just going to click quickly on the digest. Robinhood has a digest feature, and it kind of goes over what just happened. Yes, it did miss the revenue growth and also net loss. So definitely some bad news for Oscar and just bad earnings report, but it did beat earnings in general, or the EPS. So at first it jumped and then it dipped. I was actually trying to sell a covered call, didn't go through. And Robinhood actually had really good earnings. And let's see if we could pull that one up. And this one is actually down 10% on the day. That's kind of what happens with this stock. It has good earnings. It brings out good stuff, but it still gets hit hard, pretty significant. So I'm definitely concerned. Things are getting bad, and we are seeing things sort of get worse. We're seeing the government still shut down, and it's actually betting that they're not going to open up until at least December. So pretty much everything is kind of blind right now. A lot of bad data is going on, or news is going on in the market. There's no confirmation of a Fed rate cut in December as well, and that should be December 1st. So that is just adding fuel to the fire. Open, another stock I own, not a big position. It is getting up there. It's 2% on my portfolio. This one was down or hit pretty hard. They did have a earnings call through Robinhood, so I thought that was pretty interesting. And they did miss on a bunch, but I don't know if the guidance was good. It's hard to keep up with all these different earnings to actually know what happened in each one. But yeah, this one actually fell pretty significant. I bought up like 1 or 2 shares just to lower my cost average. This isn't a stock that I think is going to moon. This is really just a speculative play, only 2% of my portfolio. So I'm not really buying big. I'm not making any big purchases. I did buy Webull 100 shares at $12 or $11. So I am making purchases. I'm trying to buy the fear. We could still see downward trend, but who knows? So was this like a fake pump? Because the week did kind of start strong, or started to be strong, and then we saw massive dips throughout the week. And then I believe yesterday we did see a pump. We saw some green candles, some momentum, and people saying we're so back or jumping back into tech and growth. But this is probably more like a fake pump, and this is when hype kind of outruns reality, because these rallies aren't backed by fundamentals. They were just fueled by some hope and hype. So the second that earnings come in, or bad earnings, or just bad data comes in that is good but not great, the market definitely is hit hard by this, and we're seeing it. We're seeing it live. And this is why I don't chase those green days. I try to sell premiums on fear days, not hype days. I have used up a lot of my buying power. I only have $100 worth of buying power. If you just difference between the cash and the options collateral, most of my cash is locked up in options. And most of these options are on the selling side. So even if I lose the trade, all that happens is I get acquired shares. Zeta, actually, now that we're here, did really good. This one pumped and it was up 10%, I believe, on the day. And I've been selling puts on this one, but this one didn't really have a good opportunity to sell a put on. And it's slightly red now, but that's part of the plan. I'm fine getting assigned at prices I actually want to own. And that's the key. I'm not panicking. I'm just positioning. So another thing that happens on these red days is volatility does spike. And that's the benefit of being positioned with this sort of option income strategy instead of chasing those short-term gains, is you could actually take opportunity on this volatility. Because when the premiums go up when volatility rises, that means covered calls and cash secured puts are a lot more elevated. More along the lines, cash secured puts are probably the better bet. It's hard for covered calls to have higher premiums when everything's down. So when I'm saying premiums get richer, I'm referring to the cash secured put side. So I didn't open that many trades today, but I already did on that initial spike, and we could see more spike. But you can see here, I have Webull puts, and I have a CoreWeave leverage ETF put, and then ABTC. This is another crypto company. So yeah, I have a lot of puts open. Zeta, once again, I opened up a Mara put. I haven't done this one in a while, but Mara was hit hard. This one actually had okay earnings, didn't have great ones, didn't have bad, but we'll see what the future holds with this. I'm okay with getting assigned at 13. I own 212 shares at $16. So I'm okay with getting assigned at 13, lowering that cost basis, bringing that down, and then sell covered calls when I get assigned. So that's that one. And then long-term plays. I do have some credit spreads. These ones are defined risk. So if I lose, I do lose. So that is the one risk with doing spreads, is they're defined. And I believe if this does lose, I can lose up to like 200 or somewhere around there. That's not including the premium, but so far it is green, but who knows? We could still see some further volatility, further downward trend. But yeah, I'm not panicking. Yes, I am prepared for a more red week. I don't have much cash left, but I'm positioned. I'm positioned to acquire shares at prices I like and just wait it out, build patience. Like, for example, let's try and find one that is a really low put or a really low delta and kind of see what needs to happen for it to get filled. Let's look at Mara, for example. So right now, for me to get assigned, I needed to go under 13. And if it goes under 13 by expiration, that is a 20% drop. That's insane. And if you just simply buy Mara at these levels, you're going to be hit hard with that 20% drop. Where in my scenario, I could acquire it for here, right? And if it does drop further, that's fine. It could drop even further. It can drop 50%. And yeah, you could be just thinking, why not just wait for it to kind of hit its bottom? And you can, but you can't time these things perfectly. So yes, if Mara doesn't drop, or if it drops even further and it drops 50%, in my eyes, that's a good buying opportunity. And sure, I didn't time it right. If it hits $8, I didn't time it right, I am going to lose a lot of money. If I'm just patient and I believe in the company, I'm doing my due diligence and just simply sitting and waiting, the market will turn around. We've been in this sort of scenario before. We've seen the crashes before. They all recover. Sure, some stocks are hit harder than others, but overall, the market recovers. So going into next week, I am looking at a few things. I am looking at the VIX because the VIX is rising. The market's closed, so it's not going to change, but it's getting close to above 20. And that's really when you want to be deploying a lot more cash. Now, it's hard for me to say because I don't know if I consider option sellings cash or me actually buying stock. I kind of consider it somewhere in between because it's not technically buying stock and it's not really technically cash. So I'm saying I'm somewhere in between. If this does spike to 30, that's when you want to be all in. Or at least that's when I'm going to be all in. The other thing we're going to be looking at is the Fed December's rate cut or rate decision. It's actually went up today, pretty surprising. I think a JP Morgan or some big group or organization or company, said that they're going to cut rates. I'm not entirely sure. Or someone on the board, I think, said they're going to cut rates. So we did see a rise. It's still not confirmed. There's still a lot of uncertainty. There's not a lot of data out there to actually go off of. So we can't really come to a conclusion. I did place a bet just because on that dip, and I saw some kind of opportunity with that. But yeah, markets are kind of doubting that we'll get a rate cut. And that could actually be a good thing because the market's not factoring in a rate cut. And a lot of times the market's forward looking. And if we do see a surprise rate cut, that could really reshape the market and kind of boost it upwards. But who knows? It could even send it further down. You can't really know for certain what's actually going to happen, but you just got to be prepared for any scenario. The other thing is that government shutdown, that is holding back a lot of uncertainty. Until that's resolved, data will stay limited, and I would just stay cautious because who knows? This can last a really long time. It could end tomorrow. We really don't know. And then crypto. Honestly, let's talk about crypto because could this be it? Could the bull run be over? We really don't know. It's hard to tell what is going on. And this is why patience pays. Don't chase, or I'm not chasing these bounces or these green candles. I'm letting the market kind of do its thing, settle. I'm selling the premium where volatility is elevated. So yes, overall, bloodbath today. But this is the kind of environment where disciplined traders win. Because while everyone else panics, we get paid for staying patient. I'm not chasing fake pumps. I'm not panic selling on red days. I'm just managing risk and positioning for opportunity. If you found this video helpful, drop a like and a comment what your portfolio looked like today, and I'll catch you in the next one. Peace.